Why you don't need to fear the return of adjustable rate mortgages. So if you remember the housing crash back in 2008, you may recall just how popular adjustable rate mortgages or ARMs were back then. And after years of being virtually non-existent, more people are once again using ARMs when buying a home. And let's break down why that's happening and why it's not a cause for concern. The Mortgage Bankers of Association show just how the percentage of adjustable rate mortgages has increased over the last few years. And as the graph below conveys, after hovering about 3% of all mortgages in 2021, many more homeowners turned to ARMs again last year. There's a simple explanation for that increase. Last year, when the mortgage rates climbed dramatically, the higher borrowing costs, some homeowners decided to take out this type of loan because traditional borrowing costs were so high, and the ARM gave them a lower rate. And while today's ARMs aren't like the ones in 2008, to put it in perspective, let's remember these aren't like the ARMs that became popular leading up to 2008. Part of what caused the housing crash was loose lending standards. Back then, when a buyer got an ARM, banks and lenders didn't require proof of employment, assets, income, etc. Basically, people were getting loans that they shouldn't have been awarded. This set many homeowners up for trouble because they couldn't pay back the loans that they never had to qualify for in the first place. This time around, lending standards are different. Banks and lenders learned from the crash, and now they verify income and assets and employment and a whole lot more. This means that today's buyers actually have to qualify for their loans and show that they're able to repay them. The difference between adjustable rate mortgages or ARMs between then and now, about 60% of the ARMs that were originated in 2007 were low or no documentation loans. Similarly, in 2005, 29% of the ARM borrowers had credit scores below a 640. Currently, almost all conventional loans, including the ARMs and the fixed rate mortgages, require full documentation and amortization in borrowers with a credit scores of 640 and above. So today's ARMs are no riskier than the other mortgage products out there with lower monthly payments, which could increase access to homeownership to more potential buyers. The bottom line is, if you're worried about today's ARM mortgages like the ones from the housing crash, rest assured things are different this time around. And if you're a first-time buyer and you'd like to learn more about lending options that can help you overcome today's affordability challenge, just let me know and we can put you in touch with a couple of local trusted lenders. Until next time.